Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Happy Friday to you all. Today is August 27th. Hope you guys have an wonderful upcoming weekend here. Today's the day we've been waiting for the big news, the GDP numbers. So let's go ahead and take a look at it. It came in at about 1.6% today. Some economists were projecting even lower. Initially, I had heard right around 1.7 before from when they came out with the 2.4 number, but so it came in probably what initial revisions thoughts were, but I guess as it went on, they were getting more and more negative, so they're figuring about 1.3%. So we got the 1.6 came in. Consumer sentiment also dropped in 68.9. Compared to the estimate of 69, so just on hair under, but prior was 69.6. So even people are getting kind of feeling the pinch here and not really feeling too optimistic. But you know what? The stock market is up. This is this is I think people just some of these traders who are trying to take some profits right now. They seem to be a little confused because typically this will still kind of hurt the markets, but we're having an adverse effect. We also had Bernanke speaking today. They're getting ready for all the central bankers are getting together in Washington, Jackson Hole, Wyoming, excuse me, and for their meeting for the weekend. And he was talking about how the Fed's going to do everything they can to avoid deflation. Excuse me, I put a mistake here. Actually, it should be deflation. How they're going to avoid deflation, and expect to have very, very modest growth. That could be their modest growth could be recession in our minds. So they're kind of trying to put a positive spin on this, but the reality is that every time they put a positive spin, it's more negative news keeps coming out, and then they figure it's going to be picking up more in 2011. And we also had Intel lower sales forecast. So all this news coupled really should be actually bringing the stock market down more, but had the adverse effect, and in turn actually the bond market's dropping more. So we started 21 basis points where we left off yesterday, and right now it's down about 30 basis points. So we're going to be touching the 10-day moving average here. So this is going to be our solid line. I don't expect this to stick. We'll probably have better rates probably next week, but in the meantime, looks like the big traders are kind of sitting on the sidelines while the little ones are out there trying to cash in on their profits. So if anything else changes, I'll let you guys know. But this is one of those things where the traders are going against the technicals of the day. So you guys have a good day.